Welcome everybody, Sauce Factory Wednesday. All right, opening message. Know your worth. Know your worth. All right. See, people will devalue. They will look at you and they will add their own discount to you because they don't feel you worth what you worth. Right? They don't appreciate you, they don't value. So they will devalue you. But so know your worth, your price is your price. You're an entrepreneur, you're a business owner, whatever, right? Your price is your price. If they don't like your price, because that means you don't like them either, because they ain't your customer, right? Your price is the price. You ain't looking for them. You ain't discounting yourself for those people. Your price is your price. Same thing with the charts. The price is the price. Understand where's the price, understand where price is going, understand your targets. By understanding that, you know when you want to enter the market, what levels you're going to be taking out, and how much profits are in each trade. When you see that, you can make the right decisions to take on certain opportunities, and you'll know, like, hey, if I mess up here, I do have a second chance opportunity here because of the simple fact the money is there and it's available. So knowing that will save you a lot of time and effort when you enter in these trades, because of the simple fact the money is there. When it's not there, you don't take the trade. If it's not enough to satisfy your personal needs or whatever greed that you have, everybody's greed is different, do not enter that trade. If you don't see it, that means it's not there. You should be able to see the money. If you cannot see the money, that means you're hoping and you're gambling, right? When you just entering trades just to be entering trades saying, oh, I'm about to make all this money, da da da. Well, guess what? That is not it. You don't know how much money you're going to make because the money is not there. The money may not be there. Sometimes you say, oh, I left so much money on the table. Well, you should understand how much is there, how much is available for you to actually take off the table. If it's not there, it's not there. If it is there, take enough where it'll satisfy your needs, but enough where you can easily get out that trade and your order will be filled. Outside of that, hey, check your ego, check your greed. Hey, cross it. Let's get into it. All right. So this was Monday on crude oil CL, right? I went on and did the replay. That way we can cut off all that excess market data. I didn't want to show all that noise in the back because this was the setup. So we see this little nice takeoff point, right? From here. Boom. What triggered that? Well, we had a nice fair value gap right here. Price went into. That was the entry. But what was the signal to let us know price was actually going to go up there, and what was going to be the delivery side of this? Because you look back, price been on a downtrend, right? Price been trending downwards. What made the big difference here, right? One, we had multiple days of selling off, as you see. Boom, boom. We got a nice structure here going on. Boom, boom. Sell offs, right? Then you had these little pops, but we've been beat down pretty low, right? If you go add a couple of like a MACD real quick, you'll see we was down in the low side. We needed to reset. We oversold. We had overextended ourselves. We got an RSI here too. We don't talk about that. But yeah, so understanding that, hey, price been beat down. What's gonna happen? Where are we actually going? If you go back out to a weekly chart, so if we do this here, time yet. And we're just gonna mark out these two levels, the weekly levels. So always do this. Boom. Let's get back down to 12-minute. 15-minute do the same thing, but I use 12. Now, as you see, what happened? Monday night during the London, our trading hours, we took the last week low, right? It happened nationally Sunday, but then it came back, retested that level on Monday. The market opens on Sunday, but we know pretty much that's the Asian market. Our Sunday is the Asian market Monday, so technically it's Monday. This is our opening range. Now, what set us up? We already know we had a low. What happened after they take a major level? Typically, after that, that's when price wanted to go the other direction, right? Now, this is what you want to pay attention to. Notice the building structure, pump, 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 right? Pump, pump. Now we have a high here, right? Look what happened. You see how they took that high out. Then from there, they put in the low. They took the low out. So once we had pop, pull back, pump up again, took out the high. Then they instantly tank to take this low out, right? Structure, one up top, one at the bottom. Typically, the order operations is what you want to pay attention to, right? If they're going to go down, we're in a downtrend, right? No, should have been a lower high, right? Let's see. This is our lower high. That's what that should have been, because once again, we in a downtrend, right? From back here. Now, oh yeah, let's put this here. Because if you have any of those little indicators, they'll tell you LL, lower low. All right. So this is our lower low, lower high. Boom. This right here is a problem. It found support, right? So there's already a signal. Now, in most cases, you'll have these in the middle of a trend, like you had some here stepping up. But in this case, it went up and it took out the high. So now we no longer have we didn't get a lower low here. We got a new high. So technically, that's a higher high, right? Then price commits to dropping down, taking this low, boom, putting a new low, lower than this one. But that's the trick. You'll think, oh man, they just went up that false breakout. They're gonna come down. They're gonna continue selling down, right? But what they did was they trapped sellers, because the moment somebody went short, because they said, oh man, we way down here. Look at all that price action. We bearish, bearish, bearish. We should be able to take it down. They still on the sell side, but they actually changed directions on you. You just didn't realize it. The moment they put in that higher high, right? Boom, that's a new higher low, right? They just shifted. So technically, we looking at this. Some people want to look at it as a lower low, but actually this turned into a higher low, right? Because they shift. Then once price came out, boom, you get your fair value gap. Boom, that's your target, right? And what happened? Price take this high out, just like that, and now you have a new higher high, right? Just like that. So we have new market structure, and that'll sure change your direction, change your delivery, right? Like recycling. So seeing that, you say, okay, cool, fair value gap. You already know what the play is, right? As soon as it gets into the gap, you want to look for at least 50 to 6% of that gap to get filled. Set your order, or just wait for it to leave out, take your trade. Now, to determine how much this trade is worth, well, guess what? We're going to be targeting these highs over here, right? Okay, great. We're going to mark out these highs, and then they'll let us know, like, hey, they're going to go back to these highs, previous highs, right? Look, this is Friday high. Markets always want to go take out a range expansion. They already took out Friday low. They're going to want to take out Friday high. They're going to create a new range, because a range is always inside of a range that is trying to expand, right? So understanding, hey, Friday high on the table, boom, boom, boom. And it may seem like, oh, we're just picking points, but technically these points are significant in some form facet, right? So you have another high there. So it's the true Friday high. Let's get that one out the way. My other charts are marked up. So saying, hey, this is a high, and I still would mark this high just as a midway point, because I don't like being greedy, right? So you can easily, while you wait, because technically this is a 12-minute chart, so this took a while for this to play out, right? So from this pop to this pullback, that was 2 hours. If you got into the market that morning and you was around this ballpark, you would have seen a fair value gap. You would have seen all of your setup, boom, 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 market chart out. You had enough time. Let's say you waking up, you wake up 6, 7 o'clock. Let's say you wake up 7 o'clock. You still got 1 hour of time to get ready. You ain't gonna run to the market and click buttons. You're not gonna run to the market and just jump in a trade. You're not gonna do that. So you're gonna be waiting, right? Even if you got up at 7:30, right? 7:24, 7:30, you still had 24 minutes to make a decision. You're a seasoned trader, you know your craft, you know your ticker, you've been here before. How much time do you really need? Me personally, I'm waking up hours in advance, so I already been stalking out my market. I know what hours I like to trade, I know the volume times, I know all those details. I have it all scheduled with an alarm clock so I can be organized as possible. I want to be as organized as possible. I want to be diligent, deadly, precise. Diligent, deadly, precise, right? I want to be a sniper with this because I don't want to miss opportunities like this, right? So if you understand the box, you can say, hey, this is my limit order right up top. I'm not going to be saying I can get it here, whatever. They say you're going to do the minimum. Now you're going to say, what's to this level? 147 ticks. What's to this high? 155 ticks. So that's my target, right? I don't want the entire high. I want to come like here because this is a guaranteed hit, and from there, I can make guaranteed to get out. Most people think, oh, I can just get the max. Well, that's cool if you want to be greedy, right? But I want to guaranteed stop out. I want them to guaranteed hit my target. So I need a candle to run through that target to actually get that order filled. A wick will not get your order filled. They're just going to wick at your price and they say, oh, we didn't get a chance to fill that order because price rejected so quickly. Now, if you're looking for the whole shebang, right, you may not get that. So look at it here. It got to 140, then pulled back, right? Boom. Then it came all the way back down. Look at this. It got up to 143, right? They came all the way back down to a low of 83 ticks, bounce, and then it came back over here to 166. Pullbacks like that can really shake your resolve if you're micromanaging a trade. Once you get your entry, you got to see like, okay, move my stop loss in the profit at the X amount of ticks. After that, I need to relax, let the trade play out. A nail and bang, boom, you get out of there, right? You see the setup, you take it, get out of Dodge, but target the previous highs or the previous lows. That's going to let you know where the money lies. On higher time frames, those pivot points are where price like to go every single time. So you don't have to be guessing about how much money in a trade if you simply target those key levels. So let's slide over to Microsoft real quick. And I'm going to give you another example today of what I saw on the 12-minute chart again. I was looking for a quick day trade, nothing crazy. Get off of that. Get back to that later. So as soon as I get to the market, as you see, this is Tuesday price action. Set it up, nice little M pattern, right? So, a nice little high here. Boom. And then here's was our breakout level. As you see, market open. This was the first 12-minute candle, followed by the next candle. A measure move for an M pattern, right? Or a double top, double bottoms, but this is a double top, right? It's $2.38 move. Here we go, right? That's the measure move for this. But look what they took out. The previous low. I don't make this stuff up. This is where they like to go. So you actually want to know, hey, yes, you have one target for the previous low. So you can have that as your initial target. But outside of that, you got the measure move for this pattern. That's just going to get you into the trade and say, hey, I have a trade actually here to take because they breaking out with force. I can take this. And outside of that, if I really want to let it run, if I have more than one contract, I want to offload majority of my contracts at the measure move, right? Selling into power. Then I can have a runner or two. I can target this low, which is a $3.83 move, and which it made happily, right? It made that move with no huss, no fuss, no back talk. Then that's what I'm talking about. You don't want none of that lip wrestling when it come down to your trades. But simply targeting this last previous low, not looking for it to go to the dirt, not looking for it to be put in the coffin, none of that extra stuff. Just simply targeting the low because look what happened. Price got here, put in a nice reversal pattern. That was a nice morning star right there. It led up to an upside, right? So now price is changing directions. Boom, boom, boom. Now we got to see what they're going to do here. Is they going to put another M pattern in and fall back down and continue this downside, or will they continue up? If you look at post market, they're currently up. We got to see what's going to happen. Nvidia had earnings, Snow had earnings, a couple other people had earnings to say where they actually going to go, right? So just keep your eyes on that. But simple trades like that. Look at the last pivot low. We can even come back to this one right here. Look at this. They put that wick in. When they came down, what did they take out? That low. Started a retracement. Boom, boom, boom. Took out this low. Started a retracement. It's a rinse and repeat. Target your lows or target your previous highs. Did you want to say, man, what's my target here, right? I can target this high and say, hey, man, I want this high here. Let's get this out the way. Boom. Well, you seen how they stopped short. So you was in the call. This one I mean. If you would have went long on this leg here, if you was trying to target this high, they stopped short and then price fell. But if you would have been like, hey, I'm almost to the high. I don't want the whole entire high. I just want some of it. Or I want this high because that's an intermediate high. Right? That's an intermediate level. I take that. You would have been on the money. You would have got almost close to max payout. And from there, you would have been out of Dodge when that contract fell out the sky because somebody was in calls and they're currently worthless on this drop right here. I don't care. You're going to lose a lot of money if you was in calls, right, at this level, and you had a $6 pullback or a $6 drop. Yes, it kind of recovered, but still, that's a $6 drop, almost $7. Well, let's say it go to the high. $7.33. With a drop like that, that would tear your contract off the damn bone, especially her coming off the weekend. So if you're trying to be greedy, trying to hold for the whole shebang, right? Let's see the difference here. From this level, if you would have simply took that high, that's $1.52. You telling me you gave up $7 for $1.52 move? You could easily got out, say, left $1.50 on the board. Who cares, right? Because the move didn't even get all the way there. From that high, it only made $1.17 move after this high here. So after this point, it only went up $1.17. So that's why that's why I always say, don't be greedy. Leave something on the table for the other people to get trapped. Because those are going to be the traders who get trapped in the trades. They're going to be the ones getting tricked off the streets. They're going to be losing their profits because what happens when you up 100%, 200%, 300%, 400%, right? You up these crazy numbers. What happens when that market pulls back? Because when it done this and start coming back, you had opportunity to say, hey, you know something, let me go ahead and get out. But what most people think, they thinking, oh man, we're going to continue doing this. And now we're going to go get the high, right? Because you cannot fathom giving up what you had. If you had 100%, you can't, oh, I don't want to take profit at 50%. I don't want to take profit at 80%. I want 100 plus. You feel entitled to that higher profit goal when it's no longer available because you messed up being greedy, trying to look for more when more wasn't available. If it's starting to change and act funny at your goal, 9 out of 10, they ready to turn around because the people who was, being modest, who hit their targets, they got out the way already. They already gone. But when you're being greedy, trying to get every dollar, you're trying to squeeze every penny out the trade, you're going to get smoked. They're going to turn around and dump it on you. Just like that. Every single time. So, you got to be mindful of that. Don't want to play around with it. You want to get in, get out, get on to life. All right, let's slide over here to gold real quick. Gold had a nice little setup on it today. It definitely done some stuff, right? Let's go to the 1 hour chart. It had a 1 hour fair value gap they had on the table that they're currently stuck in. All right. Ooh, I want to leave this gap. Boom. So we're looking at this last night. All right. So when we were looking at it, like, Price got up here. We were like, all right, price coming up. Boom. We got our charts. Price dipped down. Got in there. Then it's like last night, we on the charts. The price get to the gap. They reject our London, right? Cool beans. But you'll say, like, hey, if they come back up, we got another 12-minute gap here. Mm, man, it happened. We get on the 12-minute chart. It happens. I understand it happens. Let's get on it. So this is why I made a mistake at today, right? I seen it reject the first gap, and I seen them coming into this. So I was already seeing like, okay, we're rejecting the gap. This is another fair value gap right here. They should simply take that out, right? Because I seen like, okay, cool, regular structure here. We had a little pivot point here that got taken out. Then we had the order block right there. I'm like, okay, great. This should be a go, right? In theory. That's what I was looking for. But I messed up because I didn't get the whole picture. I was rushing. I wanted to get a trade. It was early. I seen the profit targets on this. I'm talking about I seen the profit target. And I'm like, I was just rubbing my hands like Birdman. You feel me? I was like, yeah. I was like, yeah, I'm about to get him. See, I was looking at it, right? Because I knew a lot of money on the table. I said, man, I'm going to smoke them out. Right? So even from this gap, I'm looking at them to continue below, right? Hold on, that's about 500 ticks. Right? But I'm looking for them to kind of come, at least come there. That's Monday low, right? Or at least I wasn't going to be crazy. Right there by itself is 150 ticks, right? Did you know when the Hill gold payout per contract? That's enough, more than enough right there. I'm like, that's more than enough for me to get out the bed. But if it continue low, well, guess what? That's 500 ticks. So I'm like, it's worth the shot. I'm like, they already rejected once. Shoot, they coming back. I spin the block. I'm like, it's a fair value gap. That's a nice, indication. It could be the one. That could be it. But just like, most superstars and they first wife, they get taken for half, right? Because it wasn't the one. He got played. She seen that new contract come across that screen. She said, got one. Yeah, that's what I seen too. But I was a sucker. I seen that cut. They seen my cut. They knew my money before I had it. You feel me? They was counting before I got it. I was like, huh. I was like, man, I can't resist this. This was bad. I gotta get this. Ooh, I was like, I was ready. I told my, I'm like, man, let me show you. I was feel bet. I have feel ran. I was like, okay, bet that. We're gonna be here. Ooh. Actually, I took it back from over there. So I was like, yeah. I said, man, the gap right there, man, look, 65% right there. I said, that's what I'm set my limit order right there. Boom. Then I already know I got that block right there, so I can just go like right there above the candle, right? I was right above this candle. Then I'm gonna target the low. I'm like, yeah. I said, just like that. That's what we're gonna do right there. That's the move. That's the play. I said, as soon as they get there, we good. We good. They got here. They showed me a little bit of profits on Lord. Let me go to the, hit that replay. Honey, y'all see what happened. So let's get down to that 3-minute chart. Oh. So I'm telling you, they get here, right? See, this the counter that took my hope away. Because they got up here, like they said on this move. I almost got in early. I said, man. I said, nah, I'm going to wait. Slide this, right? This candle hit. Let me show y'all something, right? From there, it did this little fugazi move. You see that 15 ticks, right? I seen 15, 11 ticks. I'm like, okay, bouncing back up. I said, man, I'm used to a little red, just a little red. They can't playing around. Then boom, they took me out. On this count, I watched this count take me smooth out. I'm like, it is what it is. I said I gave it a good stop loss. I gave it old college trials, enough money on the board. I said, hey, it is what it is. You feel me? I was in there shooting in the gym. I got greedy. The downside bear opportunity made me greedy. They violated the hell out of this fair value gap. They said, nah, we didn't want that because we wasn't going that way, my boy. You got the direction wrong. You're getting smoked today. You're getting smoked. Smoked out. It is what it is. That's my fault, right? But hindsight, when I backed up and I looked at the chart, like later on, because I did my triage, right? I only take one trade. I'm one and done. If I mess up, that is what it is, right? But when I look at hindsight, I said, look what they did. They took out the high, then they ran, took out the down. So when they came back up, that wasn't the rejection point because they already told me they was putting in new highs. They took the liquidity off this low here, right? And I was in the wrong direction the whole entire time. So that's what happened. I got greedy, thinking like, oh man, that's a great trade. But I misread it because I didn't take my time out to map my trade out. Map it, that's my fault, right? I missed a couple of steps, trying to rush, trying to hurry up and get a limit order set because I set the order. I didn't want to miss the trade, so I set the order ahead of time. You see what time this happened, right? Right at 8 o'clock, the volume don't come in to 9. I jumped the gun. That's my fault. I gotta take that. I didn't feel bad about the loss. I just understand that's what happens when you operate outside of your principles. Because if I would have waited to my normal trading hours, it would have showed me like, oh, nah, this is bullish. They actually violating that, or I should have waited to see if some form of reaction. With that Doji 910, I still would have took that trade, still would have lost because I was already fully committed to the downside. That's why I don't re-enter the market. Because if I have a bias on my mind, you gotta ask yourself, how hard will it be to change that bias, right? Most times I'm gonna go back down to the 12-minute chart. Matter of fact, I'll go down to the 3-minute chart because that's what I was watching and trading on. Right? When it done this move, it's at the higher gap. What would have stopped me from jumping back in and going back down to this and then get smoked out again because I'm looking for 100 ticks, right? What would have stopped me from saying, "Oh man, that's a bearish candle"? They rejecting. Whoop, jump back in. Oh yes, 50 ticks, 40 ticks. I'm like, all right, but I'm looking for 100. I'm only gonna move my stop loss and profit a little bit. So from there, you got to ask yourself, if I would have stayed bearish, I would have probably lost money, or if I didn't get the proper entry, I would have lost money, or I would have got a little bit of money chasing and then took a bigger loss because I'm trying to get back in. So that's why I don't recommend keep clicking that button. Hit the button over and over and over and over and over and over again. Do one trade, make it count. One trade, make it count. Because running back into the market, especially if you don't fully understand the direction of the market or you have a bias in one direction, and maybe you're right for that moment. Maybe you are. But things change. And if you don't go with them, you get swept. Point blank, period. So that's why I say be diligent, be a sniper, be precise. Do not run into the market over and over and over and over again, thinking you're going to get rich in one day. Place your trades, make them count, know how much they're worth, and accept your wins and losses. Sometimes you win, sometimes you learn. I learned something today. It is what it is. I'll be back tomorrow because I didn't blow my account. I still have money to spare. I can still trade tomorrow, right? That comes from having discipline to say, oh, lost. Okay, cool. I'll be back tomorrow. I'll be back next week, whatever the case, whatever that may be. I'll be back because I still have an account. Clicking will only deplete your funds and deplete your mental fortitude. Yes. Come on, Rod. Talk to him now. So this is major keys, the reason why we do this every week, why we on here every day, if we can, we in the chats, all this stuff, because of the simple fact these lessons must be drilled in over and over and over again. The most basic levels, the most basic things, just by a simple change of character, right, can cause you to lose a trade, and you don't recognize that because you just want that trade, you want what you want, you can lose. Missed 2 pivot points cost me the whole trade today. Could have been successful. Could have just jumped in, went for a good ride, right? But 2 pivot points. I missed this key point and this key point. I didn't really put 2 and 2 together. I just seen this. I found the gap. I said we're gonna smoke them because we got them, and I got smoked. So there we go. I try not to learn hard lessons. Yeah, you're right. I don't like learning hard lessons. I'll learn a lesson, but I ain't gonna make it a hard one, right? By steady running back in there. I've done that before, getting into a trade, getting stopped out, going over and over and over back into that trade in the same direction because I believe I am correct. I feel that I'm correct and I'm just going, just driving it in, boom, 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 boom. I'm wrong as all outdoors. Didn't have no business in that trade, right? But that's what I was doing. And that led to a lot of losses, a lot of blown accounts until I got that under control. So that's my message for today, people. I hope this brings y'all some form of help, solitude. And on that note, peace and blessings. My setup, my alert going off, like a pager or something, and you thinking that that's the right thing to do, that you clicking that button 10, 20, 30, 40 times, thinking like, hey, I'm really trading. So no, you're gambling. All right. You playing games, you gambling. That is not a setup. A real setup don't happen that often. Look for the A plus setups, get out to smaller time frames, get rid of the stress, get rid of the ego, admit that you're over trading, and learn and grow. It's the only way to grow is learn from your mistakes. But by doubling down, tripling down on these bad habits, taking these bad habits into the next year, it's only 2 more months left. And this is the last day of October, okay? So really only 1 month left in this year. If you take them same habits into 2025, because it's already here, folks, you take those same habits into the next year, then you need a wake-up call, okay? You need a wake-up call. I'm going to say what I really want to say. It's going up to YouTube. Make sure I like, subscribe, and comment on this video. I appreciate that. But you take these same habits into the next year, and you're going to keep complaining about why me, but you refuse to let go of your negative ways. You refuse to let go and grow. You refuse to humble yourself, get rid of the ego, and say, hey, maybe I should change things around. Maybe I should change my plan or actually follow my plan and stick to it, right? If you lose more than 2 trades in a day, shut it down. 3 trades, shut it down. You shouldn't get past 3. You suck, okay? Number 4 ain't going to be the magic bullet. It's not. Shut it down. You're wrong. By the time you clean up the mess you made on the previous 3 trades, plus the fees, you still in the hole. You keep that up, you blowing your accounts. It's no magic bullet. If I'm wrong one time, I'm shutting it down. I only take me one time to say I'm wrong. I'm logging into my paper trade account. I'm gonna make it do what it do. If I'm right there, okay, cool. That means be patient, learn from your mistakes. But I'm not gonna keep tricking off on a broker with these fees. I'm not gonna keep giving my money up just to prove a point because my ego hurt. I'm not doing it. Okay. I highly recommend you take your loss. You're wrong that day. Shut it down. Be intelligent. Come back tomorrow. If you really believe in your trading skills, you should not have a problem coming back the next day because the market going to keep opening. Matter of fact, the NASDAQ, the New York Stock Exchange, they trying to keep that open 22 hours or 23 hours. They're trying to match the futures market. So really going to take it 22 hours a day. Opening on Sunday, closed by Friday. 22 hours, right? So it's even more trading they're going to try to get a place. And I guarantee you hit that button and y'all fall for that trap, you ain't going to be on these Wall Street streets no more. You're going to be out there having a GoFundMe trying to get another account. You're going to be begging for money. Yeah. You're going to need somebody to spot you some change to help you get another, account for another challenge. Get you another challenge account. Yeah. Yeah, they're gonna have to set up rehab centers for Apex, but all those cheap accounts y'all keep getting. Now, get it together. Tighten up. Don't take the habits into next year. Learn from your mistakes and grow. That's it. It ain't no other way around this. You can't. Yeah. Thank you, Rob. At the end of the day, who you giving these profits up to? You feel me? Like you keep doing the same thing, you're gonna keep getting the same results. There's no way around it, right? If you keep clicking that button because you refuse to sit down, take a break, learn the mistakes, review, review your charts, look for your best trade setups. Typically, we do this on Wednesday. Y'all can raise your hand about it, put it in the chat or whatever, unmute. After Wednesday, how many good trades is it? Maybe one by Friday? Is it one in Thursday? Y'all tell me if I'm tripping or not. That 100 tick move on gold, that 100 tick move on oil, that 100 plus tick move, that 1,000 tick move on any other tick. Talk to me, bro.
Happened real nice on Tuesday.
But after that, what happened after that?
After that, it's up in the air, depending on news.
Exactly. It's up in the air. It's fairy dust. It's foo-foo. Once it have its good moves, it's dead. It's done. That's it. So when you keep carrying, trying to beat that horse and having a trade every single day, all you're doing is subject yourself to losses, mental damage, and fees. Tricking off on the market, you're messing up your mental health. Now you're crying in mindset on Saturday. I'm enjoying a coffee, enjoying my Saturday. Being bougie, my pinky out, sipping some coffees. Being a coffee snob, what they say. Yes, it's mine. I'm having fine discussion over different beings from different regions of the world. You know, that's how I like to spend my Saturdays. But if you want to have emotional damage, keep trading like that. Yeah. Keep trading like that. All right, and that's my piece.